Welcome back. Shares of Alaska Airlines down nearly 7% after posting a second quarter revenue miss. The airline fell short on third quarter profit forecasts as well as they grapple with higher operating costs and a pricey new flight attendant contract. Still, Alaska soared past EPS expectations and said it's looking to further expand high-end offerings as demand there continues to grow. For more, we're joined by Alaska Airlines CEO Ben Minicucci. Ben, it's great to have you back. Welcome.
Thanks, Kelly. Great to be here with you.
We have a record high number of travelers, and they might not agree when they hear it, but we also have really low airfares that have been kind of plaguing the industry's performance. Who started all this, and how do you bring it to an end?
Well, listen, I think on Q2, a lot of capacity was put into Q2, and I know everyone out there feels like airfares that keep going up, but the fact is from this year, this quarter, second quarter of 2024 compared to 2023, fares were lower. In terms of our performance in Q2, even with all this increased capacity, we had a fantastic second quarter. We had record revenues. We had a pre-tax margin of 15.8%, which will be the best of any carrier out there. So we feel like we're in a really good place, especially with how we configured a business model. And like you mentioned, with premium, I think we're in a fantastic place with premium. And I just want to take a moment to thank the fantastic employees of Alaska for the performance.
Yeah, I'm looking at the shares, which are trading around $37 today. The post-pandemic high was around 70, but even in the years pre-pandemic, the late 2010s, when the airline seemed more investable again, you were in the 70s, you were in the 80s. The time of the Virgin Air acquisition, I think you were trading around $80, but then that brand name was sunsetted. Do you ever look back and think, I don't know, maybe you should bring it back or do something to reignite excitement around it? Or is it not about the brand and not about anything like that? And is it more just about capacity issues and some of the expenses that we have mentioned as well, flight attendant contracts and so forth?
Kelly, you're asking a great question. I think it's about all of that. I think brand is very important, and we've worked hard on our Alaska brand. It's extremely strong here in the Pacific Northwest. We have an amazing loyalty here, but I think brand makes a big difference. But what you said is the business model is even more important. And I think this is why in the last few years since the Virgin acquisition, we began thinking about this premium space. And you don't get here overnight. And I think as Alaska, as a domestic carrier, and when we compare ourselves to our other domestic peers, our entry into premium, where 25% of our seats are premium, it is the reason why we are going to be profitable. We'll be one of the top 3 margin producers in the industry this year. It's why we're differentiated from all our domestic-focused peers. So I think business model matters. I think brand matters. And I think as we go forward, I think we're extremely well-positioned, even despite what I believe is an overreaction on our stock.
I'm going to talk to one of the great value investors on the airlines in a couple of minutes here. But before I ask her, I want to ask you, how long do you think this period of difficult earnings and pressure, downward pressure on fares is going to last? I mean, do we have months more to go, years more to go?
You know, Kelly, it's kind of like your previous guest. You know, I think there's a lot to do with the economy and how the economy is going to evolve over the next few months. You know, rate cuts, no rate cuts, how people are feeling with inflation if inflation comes down. I think those things are all interrelated. I think a lot of people since the pandemic now are flying, and we don't really see demand backing off a little bit. Demand is still strong. We're still filling our airplanes, and if you ask anybody on the street, they'll say, God, planes are full, airports are full.
Sure.
And that's true. I think it's, and I think as we go forward, I think it's having the right brand, business model, loyalty platform, having relevance and having loyalty are 2 big things that really drive profit at the end of the day. Do
you watch the election events like the rest of us, just kind of somewhat bemused? Are there any implications that really at stake for your company? Depends on who wins in November.
For us, we've been in business 90 years, and we've worked through many administrations. And I think our focus, whatever administration is in power, is really to focus on aviation industry infrastructure. We want to make sure that infrastructure, which the government plays a huge role in terms of air traffic controllers and in terms of airspace and how it's managed with the FAA, that's at the highest possible levels of efficiency and reliability. So that's where our focus is at, and I'm sure that's where all the other airlines are going to be at as well.
Maybe it could be bipartisan. This could bring people together. Maybe is better airline infrastructure. You know, it seems one area that everyone thinks we could do better. Yeah, Ben, thanks very much. Good to check in with you. Thanks for your time today after earnings. We really appreciate it. Alaska Air CEO Ben Minicucci.